Fear, greed, euphoria, despair. These are just some of the many emotions that you will experience as a trader. But you don't have to. These emotions can be tamed, controlled, and your trading will be better for it. I'm Robert Roy. I'm a full-time trader and trading coach and founder of WealthBuildersHQ.com. Now, we teach traders technical strategies to build their wealth utilizing the financial markets. Now, I've been at this for many years now, and I've experienced all of these emotions for myself. So in this video, I want to walk you through how to get a handle on your emotions so you, yes, you can become a better trader, a more neutral trader. When we look at some of the major emotions that you deal with, yes, there are many, but I want to talk about the top two, and that is fear and greed. And I know some will come out and say, oh, Rob, that doesn't happen to me. Well, then you're better than anybody else that I know in the market, because everybody deals with emotions in the market. I was told as a brand new trader, you know what? You need to learn to trade emotionless. And I wish I could, right? It's called automated trading. You put a system on, you hit enter, you walk away, come back and see how it did. Other than that, you're going to have some emotions in there. And those emotions will differ when the paper is white versus the paper is green. When it's real money versus practice or non-funded trades, as we like to call them at Wealth Builders. Right? So when we look at the two major ones, let's start off with the one that most people have the biggest problem with is fear. Right? And, you know, FOMO, the fear of missing out, part of it, right? My fear when I'm in a trade, what are some of the things that could cause fear? The fear could be, if you use FOMO, right? I'm not in this trade and I might miss the big move that Tesla just made or whomever it might be, right? Or I go ahead and I get into a trade and, right, when I enter a trade, I'm in position 3 in the chair. I'm leaned forward, hands on the keyboard, and I'm working. I'm entering that trade. Once I've placed that trade, I want to be back in position number 1. I want to be away from that trade completely. Right, where I can't reach the keyboard, I can't make rash decisions, because what's going to happen when it comes to fear is you're going to set up where you, let's say it's just a stock you bought, and you bought the stock right here, whatever that price is. You decide you're going to put a stop down below it in case it goes against you and a target up above. So you basically put a bracket around your trade. Well, you got in the stock, I'm going to use a number, we'll make it up. Let's just say it's at $10 a share. And the stock moves down. It's at $9.95. And it moves down on the next 1 minute candle, and now it's at $9.92. And then it's at $9.86. And you're freaking out. Your stop is at $9. But you are worried that it's going to make it all the way down to the stop. You're going to be a real loser. The broker's going to know it. You're going to have to tell your spouse or significant other. Your friends are going to laugh at you. The other traders, you know, see where I'm going with this? And it just spirals, right? You need to set it up and walk away. Set it and forget it, right? Put that trade in. Put that bracket around that stock or option or Forex or futures. Set it up and walk away. And whatever happens, happens. You know what your risk is in the trade, and you know what your reward potential is in the trade. But fear is the number one issue, the number one emotion you will deal with as a trader. Then comes greed. Greed is on the other side. I got in the stock at 10 and I set a target at 12. And it gets to 12 and I say, you know what? I'm not going to actually get out of the trade there. I'm going to let that go because, man, I think this one's going to double. I think this stock goes to 20, right? I'm going for the home run, baby. And you can, but you probably shouldn't. See, now when that stock starts to whip back against you because it hit its resistance level where you thought it was going to start to fail, and it drops like a rock, right? Or you don't have a stop set in there because you're going to watch it every day, and then you're driving through a tunnel and you don't get your email alert that the stock has just gone down and you have no idea the stock is falling, right? That greed of I am going to try to make more money out of this, right? Or you're buying the car and you haven't even closed the trade out yet. Right? Focus on what's in front of you. Focus on the trade itself. Do not focus on the end result of what am I going to get out of this. What you're getting out of this is a successful trade. Whether that's $1, $100, or $1 million, it doesn't matter. The trade is going to pay you what the trade pays you based on your set of rules. Don't deviate from that and try to change the rules because you are fearful or because you are greedy. A deviation on fear and greed could be something like this. You get into a trade and the stock goes up and you get out and you make $1. and you take that dollar and you walk away. And then the stock runs up and it moves $4 or $5 more. And you're upset that you missed out on what you could have made. But then we turn that around and you get into a trade and it starts moving down and you had your stop set down that if it went against you, you were out at 50 cents of risk or cost in that trade. And it moves down, hits the 50 cents, you're taken out of the trade. You come back an hour later and you realize that stock dropped $5 and you're happy that you got out of the trade with what you did. So when you think about it, think about this deviation we're talking about here. You were upset when you made money and you were happy when you lost money. You see, you can't chase after it like that. If the trade worked, the trade worked. It doesn't matter that you could have made more. The expression, don't glean the fields, leave something on the vine for the next person passing through the field so they can pick some fruit as well. Leave it where the next person is willing to buy it from you and you're not stuck with a position that is now dropping and you're selling out of panic and fear. To build the trust that you need in your system, you've got to trade that system. What does that mean? How does that work? How do we do that, Rob? The very first thing is you've got to find a system, period. And you have to find something that you feel fits your risk profile. Traders ask me all the time, Rob, what's the system that I can make the most money with? I said, it's probably not the one that you're going to like the risk with. What do you mean? The one that you can make the most money with is probably the one that has the highest risk factor to it. So instead of looking at it as what's the most money that I can make, what is the risk that you're willing to accept in a trade? Are you willing to buy calls and puts, right? Take directional trades. Yes? Great. Willing to buy a stock? Great. So you know those are comfortable for you. Are you willing to sell naked puts? Whoa, dude, hold on there. Someone else might go, yeah, I'm good with that, as long as they're below a certain price. Okay, so you would maybe accept that risk. Are you okay accepting the risk of naked calls? Taboo, right? Unlimited risk for a limited profit. You should never put yourself in that type of trade. You want to make sure that you have a system that fits your risk profile. And that trading system, that time-tested trading system, only becomes time-tested when you test it for a certain amount of time. What does that mean? You need to go ahead and find the system that you like and you need, or believe you like, and you need to practice trade it. Non-funded trading. 50 trades, 100 trades, don't stop. Just keep trading the system. Day in and day out, trade the system. The only way you'll ever know if it works for you is if you trade it. And I realize that funded trades and non-funded trades are different. Practice and real money, green money, white money, right? They're different emotionally, since that's what we're talking about here today is emotions. And that's okay. But the only way you're going to trust that system is if you practice it first. Now you have a time-tested trading system that you do trust. See, that's the key. Can you trust what you're doing? If it's the first couple of trades you're doing, you can't. When that stock drops like a rock and you're looking at it and saying, oh, is this the right place to get in? If you've traded it and you know that every time this stock does this, it bounces from there, you've got to test, time tested, that your system works when this happens. Does it work all the time? No, maybe it works 60%, 70%, 90%, whatever the number is. Let's say your system works 70% of the time. So 7 out of 10 trades, you win. As long as your reward to risk ratio is set properly, you're in the right game. If not, that's where you get in trouble. Let me tell you a personal story for me about emotions, okay? I remember as a fairly new trader, I looked at a stock and I said, man, I really feel like this one's gonna go up. And if I was willing to risk $500 in my average trade then, now I put $1,000 in this one. Why? Because I knew, man, I felt that this one was gonna go up. I just knew it, right? I was trading with the wrong emotions, right? I was not trading up here. I was trading from my gut, not from my head, right? And of course, that trade went against me. Don't ever trade what you feel. Always trade what you see, which means the technical analysis component of that chart. Now, one of the biggest things you can do to help remove the emotions is to automate your trade. But I talked about setting that bracket around your position, whether it's an option, a stock. When you get into that trade, you immediately set up a good till cancel order at just below your resistance level. And if it breaks down below that support, you set your stop to get you out. They are what's called an OCO order. Order cancels order, or one cancels other, depends how you like to say it. But basically, if the stock moves up and your GTC is hit, the stop loss is canceled, then you go away. If the stock drops down and your stop loss is hit, your GTC is canceled, right? But it's automated for you. You don't have to sit there and watch it. If you are willing to accept the risk and you have a time-tested system, then you should be fine with setting it up and walking away. One of our coaches, and actually one of my very first mentors, Ryan Litchfield, he talks about reframing the way that you approach trading. Instead of looking at it as, I'm going to have to put this much money in the trade, he said if you look at it as a way of, it could cost me X dollars to see if your strategy is going to be profitable. So in other words, if you're willing to risk $200 in that trade, that's the way he looks at it is, I am risking $200 to see if the strategy is going to be profitable. It's a great way to reframe what the average person thinks about the trade. How do you know that you've had enough for today? How do you know? My rule is pretty simple. If I do 3 trades and they all go against me in the same day, I'm done. Either the market's funky, I'm funky, wacky, whatever you want to call it. Something's not working right. My mind may be off. I may have had an argument with my wife. Whatever it is, I want to make sure that no matter what happens, I've got a system in place. And that system says, strike 3 and you're done. Go sit down on the bench and you'll come back tomorrow and play again. So while all of these tips sound very straightforward, implementing them can be very difficult. All right, so there you have it. Now, while all of these tips sound very straightforward, implementing them can be a little more difficult. If you're a newer trader, you'll find that much of your energy as developing a trader will be learning to tame those emotions. Before long, controlling emotions in the market will become nearly second nature. Until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and remember, you're just one trade away. Check out another one of our trainings right here.